earnings conference call hosted by Phillip Capital Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Tiwari. Thank you, and over to you, sir.
Thank you, Shruti. Good day, ladies and gentlemen. On behalf of Phillip Capital India Limited, I welcome everyone to GAIL India Limited's second quarter FY26 earnings call. Today, we have the pleasure of having with us the senior management team of GAIL, led by Director of Finance, Shri R.K. Jain. I will now hand over the floor to the management for their opening remarks, which shall be followed by a question and answer session. Over to you, sir.
Thank you, Nitin. Friends from the investors and analyst community, a very good afternoon and welcome to GAIL's earnings call for Q2 financial year 26. At the outset, I thank you all for attending this meeting. Let me first begin with the latest business updates. It gives me immense pleasure to inform you that on October 16, 2025, GAIL's Srikakulam-Angul pipeline, which is a 422 kilometer, has been dedicated to the nations by Honorable Prime Minister. Further, physical progress of Mumbai-Nagpur-Jharsuguda pipeline has reached to 97%, and PASO approval for Mumbai-Nagpur section, which is 693 kilometer, and Chhattisgarh-Odisha section, which is 489 kilometer, has already been received, and gas is under process. The remaining pipeline is in advanced stage of completion and is scheduled for commissioning by 31st December 2025. On September 9, 2025, GAIL got PNGRB authorization to lay, build and operate pipeline from Vijaypur to Bina. This will connect to the BPCL Bina refinery. The pipeline will have a capacity of 3 MMS CMD, and this is 105 kilometer length and involve a capex of 450 crore. The timeline for laying this pipeline is 3 years. This pipeline will become part of integrated natural gas pipeline system of GAIL. As already informed earlier, GAIL has got authorization for capacity expansion of JLPL LPG pipeline from existing 3.25 MMTPA at present to 6.5 MMTPA. Based on current tariff rates, this will increase GAIL's revenue by approximate 700 crore rupees. As you know, the tariff is also increasing every year by 3.4%, so that will further add to GAIL's revenue. And it will also improve GAIL's bottom line around 600 crore rupees per annum at EBITDA level, not bottom line at EBITDA level. And again, the increase of tariff of 3.4% will have further addition to it. GAIL's result for the quarter ended 30th September 2025 have been declared today. I will briefly touch upon the major highlights for this quarter. Thereafter, we may open the session for your queries. First of all, I will take you through the financial highlights of the quarter. GAIL's turnover in this quarter, that is Q2, is almost flat, which is 34,972 crore as against 34,735 crore in Q1 financial year 26. Profit before tax stood at rupees 2,823 crore as against 2,533 crore in Q1 financial year 26. This is up by 11%. The profit after tax during the quarter increased to rupees 2,217 crore as against 1,886 crore in Q1 financial year 26. This is up by 18%. On comparative quarter basis, that is quarter 2 of this financial year versus quarter 2 of financial year 25, GAIL achieved turnover of rupees 34,972 crore as against 32,810 crore in corresponding period of last year, an increase of approximate 7%. Profit before tax stood at rupees 2,823 crore as against 3,453 crore. This is down by 18%. And profit after tax stood at rupees 2,217 crore as against 2,672 crore, down by 17%. Now I will take you through the physical performance during the quarter. Gas marketing volume during the quarter stood at 105.49 MMSCMD as against 105.45 MMSCMD in Q1 financial year 26. And natural gas transmission volume was 123.59 MMSCMD in Q2 financial year 26 as against 120.62 MMSCMD in Q1 financial year 26. The average capacity overall basis, if we take off the total capacity, authorized capacity is 59%, but I will talk to the integrated natural gas pipeline system, which is the main revenue earning system. As per the capacity worked out by PNGRB, the applicable capacity for tariff determination for 25-26 is 150.46 MMSCMD, and considering the volume flow in this integrated pipeline system of 111.76 MMSCMD, the capacity utilization for this pipeline was 74.28%. Polymer production was back to normal level of 220 TMT in Q2 financial year 26, which is stood at 177 TMT in previous quarter due to annual turnaround. Liquid hydrocarbon production stood at 221 TMT as against 199 TMT in previous quarter. LPG transmission was 1,167 TMT as against 1,131 TMT in previous quarter. The capacity utilization was approximate 101% during this quarter. Now I will take you through the consolidated financial highlights for Q2 financial year 26 versus Q1 financial year 26. The consolidated turnover in Q2 financial year 26 stood at rupees 35,594 crore as against rupees 35,369 crore, almost flat. The PBT in Q2 financial year 26 stood at rupees 2,565 crore as against 3,029 crore in Q1 financial year 26. The profit after tax in Q2 financial year 26 stood at rupees 1,972 crore as against 2,369 crore in Q1 financial year 26. GAIL, as you know, GAIL also has got 6 geographical areas authorized LCT gas distribution. I will also share the performance of these 6 geographical areas. GAIL has an infrastructure of 213 CNG stations and 4.5 lakh DPNG connections. During the quarter, 13,700 new DPNG connections were added. The physical volume stood at 0.46 MMSCMD. In the next 2 years, GAIL targets to add around 85 new CNG stations and around 150,000 new DPNG connections. As you know that GAIL also has got 100% subsidiary exclusively dealing in retail business. Now I will also briefly touch about the financials of GAIL Gas Limited. In Q2 financial year 26, turnover of GAIL Gas stood at rupees 3,235 crore as against 2,927 crore in Q1 financial year 26. PBT increased by 1% and stood at rupees 148 crore as against 146 crore in Q1 financial year 26. Profit after tax was up by 3% and stood at rupees 111 crore as against 108 crore in Q1 financial year 26. The physical volume stood at 7.72 MMSCMD. During Q2 financial year 26, GAIL Gas along with its JV subsidiaries has added 44,512 new DPNG connections and 1 CNG station. GAIL Gas with its JV subsidiaries have an infrastructure of 11,74,000 DPNG connections and 665 CNG stations. I will also touch upon the ongoing projects with GAIL. Pipeline projects, SAPL, as I already shared, is commissioned, and MNJPL, JSPDPL, KKMBPL Phase 2 are scheduled to be completed during this financial year, and Gurdaspur-Jammu pipeline is scheduled for completion in financial year 26-27. Petrochemical project, I will first share about the 60 KTA polypropylene at Pata and 60 KTA polypropylene at Pata and 1,250 KTA PTA plant at GMPL are scheduled to be commissioned in current financial year, whereas 500 KTA PD HPP plant at Usar is expected to be completed in financial year 27. CapEx for Q2 financial year 26. During the quarter, the CapEx of rupees 1,662 crore rupees was incurred, out of which 784 crore was incurred on pipelines, 514 crore was incurred on petrochemicals, 226 is operational capex, and remaining approximate 138 crore on CGD, E&P, renewables, and equity investments. Now I will share also the segment-wise outlook for short to medium term. The profit before tax from gas marketing business during the quarter stood at rupees 1,227 crore. The gross margin during the quarter stood at rupees 1,551 crore. The PBT from gas marketing margin during H1 financial year 26 stood at rupees 2,221 crore. The gross margin during the H1 financial year 26 stood at rupees 2,866 crore. At PBT level, we are on our path to achieve the annual guidance of 4,000 to 4,500 crore from the gas marketing segment in financial year 26. In the gas transmission segment during Q2 financial year 26, average transmission volume improved to 123.59 MMSCMD as compared to 120.62 MMSCMD during Q1 financial year 26. Average transmission volume for H1 financial year 26 stood at 122.11 MMSCMD. From gas transmission point of view, the current financial has not been so good for GAIL. We had to revise our guidance earlier. The main reason for this downward revision was delay in pipeline connectivity to refineries, unplanned shutdown and tripping of fertilizer plants, lack of demand from power sector due to moderate summer, early onset and above average monsoon. The situation was further worsened by higher than usual pricing of natural gas in the spot market, which impacted the consumption in domestic market as refineries and industry switched to alternative fuel. Further, due to extreme monsoon and flash floods in northern India, GAIL suffered pipeline disturbances at 4 places which are expected to be restored by the year end. Currently, the services are being managed partially through alternative arrangements. This also has impacted the transmission volume, which will be replenished as soon as the pipelines are operational again. Due to above unforeseen circumstances, the annual transmission volume for financial year 25-26 is expected to be at the level of around 123 to 124 MMSCMD. However, considering that most of the other sector may not be there and there will be normal growth and commissioning of new pipeline, that is SAPL and MNJPL, GAIL expect transmission volume to be increased by around 8 to 10 million, and we expect our volumes to be around 133 to 134 MMSCMD in financial year 27. Polymer production stood at 220 TMT as against 177 TMT in previous quarter. There is a loss of rupees 299 crore during Q2 financial year 26 due to increased input gas cost. The segment is likely to be at similar level for remaining part of the year. However, various measures like construction of dedicated pipeline, that is C2, C3 pipeline, installation of advanced process control, debottlenecking, and 60 KTA PP plant are being taken for cost optimization and improvement of efficiency. Since HS gas being used as an internal consumption by Pata PC plant, and HS price have been unusually higher during this year, which is expected to be softened in coming financial year. These factors may hopefully start giving positive results from next financial year onwards. LHC production stood at 221 TMT during Q2 financial year 26 as against 199 TMT in previous quarter with a PBT of 112 crore. There is a drop of 45% in PBT from LHC segment as compared to previous quarter, which is primarily on account of reduced price. As you know, the LHC price on an average basis has gone down by approximately 4,600 rupees per metric ton. GAIL's new well gas allocation for LPG sinkage has been reduced from 0.32 MMSCMD to 0.2 MMSCMD with effect from 1st October 2025. Estimated impact on production will be around 33 TMT for H2 financial year 26. GAIL management is constantly taking up the matter for further allocation of domestic gas for LHC to enhance the capacity utilization of our LPG plants. In addition to above operational and financial performance, I would like to highlight that company is taking proactive measures to implement initiatives for maximizing profit and make our company future ready with the introduction of advanced technologies and AI-based projects. Project Sanjay 2, our flagship project, is focused on maximizing profitability across core business segments through targeted improvements enabled by advanced data analytics. Under the above project, GAIL is implementing 30 use cases leveraging advanced technology with an estimated capex of 146 crore. These use cases together are expected to provide the operational saving of approximately rupees 600 crore on 5-year NPV basis, in addition to huge quantitative benefit in optimization of process, manpower, and material. That's all from my side regarding the overview of performance and projects. The management of the company is available, and we would be glad to address any query that you may have. Now I hand over to you, Nitin.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Probal Sen from ICICI Securities. Please proceed.
Thank you for the opportunity, sir. Am I audible?
Yes, very well.
Yeah. Sir, first question was with respect to the volumes. Because of the way that the rains have gone, obviously demand from the power sector has been a major factor driving the slower demand. So any guidance you can give us of what H2 looks like, given the very long tail of monsoons we have seen in the country this year?
So I shared in terms of average volume for this financial year, which is around 123 to 124 MMSCMD, and we expect in S2 we will be around 125 MMSCMD.
So not much change in terms of segmental demand, at least for this year.
Actually, yeah, you're right. Not much change, but kind of quarter one we saw, we are not going to see those things because in quarter one, as we shared, fertilizer plants went for shutdowns. The power demand was not there. Our petrochemical plants were also under shutdown. So quarter two onwards, we have started seeing the normalcy, and we will see some kind of growth in terms of commissioning of new pipeline and the normal growth.
Got it, sir. And a couple of more questions. One was about the Dabhol LNG with respect to the progress on getting it to full utilization. Any guidance for FY27 in terms of the terminal utilization that we can get?
So as we shared with you, the Dabhol terminal is now full weather terminal, right? Mm-hmm. And the nameplate capacity of that terminal is 5 MMTPA. But only one constant is still we are experiencing that we do not have the heating system. Whenever RGPPL runs, we are able to take the advantage of the heating system available there. But in the absence of heating system, we are expecting to utilize around 50% of the capacity, and the heating system will also be available sometime in 26-27.
Got it, sir. And last question from my side. You had, I think, mentioned in previous interactions that the last leg of that Kochi-Bangalore pipeline is imminent in terms of completion. So if you can kindly refresh us in terms of latest timeline for both the legs to be fully operational.
Yeah, I shared with all the pipelines. Actually, including KKMBPL, the last leg which is pending, Jagdishpur Haldia and MNJPL, all the pipelines GAIL is constructing, excluding Gurdaspur Jammu pipeline, will be commissioned during this financial year.
All right, sir. Thank you. That is very helpful. I'll come back for more questions. All the best.
Sure. Thank you.
Thank you. The next question is from the line of Balaji Das from Alliance Services. Please proceed.
Hi. Good evening. Am I audible?
Yeah.
So I have basically two questions. First question is what is the latest status on this integrated tariff which is pending from the PNGRB? We heard that there has been frequent discussions and there is some difference of opinions in the tariff billing and etc. So could you please provide the latest progress on this integrated tariff pipeline actually?
As you know, we submitted our integrated pipeline tariff way back in August 24. All the processes has been completed. And now with regard to various information, news which are going around, we don't bother about these news. Because we are very clear whatever tariff we have submitted, that is 78 rupees. Which is in terms of the regulations, and we share that even if PNGRB based on past moderations PNGRB does, we were sharing sometime in March that our tariff will be around 70-71 rupees. But in between, one development has happened. PNGRB has changed its regulations with respect to sharing of revenue. Above 75% utilization of pipeline, 50% to be retained by entity and 50% to be passed on to customers. That regulation is also giving some kind of increase to tariff. And second, the amount of delay it is happening in the processing of tariff, that is also adding to the tariff. So maybe 20 paisa per month is increasing. So our guidance that on conservative basis of 70 rupees was past, that should increase by 2 to 3 rupees. Now coming back to specific answer to your question, when it will come, we expect it can come any time from now, maybe in November.
Okay. Thanks for the update. And the second question is like on this, we heard like on the listing of the GAIL gas IPO actually. Okay? So did any further progress on the consultant, and when are the future plans actually for GAIL gas actually, because we heard that we are hiring consultants for the analysis of listing and etc. You
heard rightly.
Yeah.
But GAIL gas is one of the biggest company in the country in terms of city gas distribution. I shared in the brief that currently it is marketing 7.26 SCMD volume. GAIL gas has got most of the geographical areas any city gas distribution company has. We have one of the geographical area like Bengaluru. It has already reached 1 SCMD, and we in GAIL believe that now it is high time that we start the process of listing GAIL gas. In that regard, we have already started the process of hiring of consultant. As I understand, the consultant has already been selected, and the order may have been given. We may be giving in very few days from now. Either it might have been given or may be given. So we are on our path to study about listing of GAIL gas, and after conclusion of that study, certainly that study is very important for us. We expect 1 year timeline or so should be good enough.
Okay. Thanks for the opportunity. Thank you.
Yeah.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please proceed.
Hi, good evening. Just a question on petrochemicals. What was the input gas cost in Q2? If you could just tell that.
The input gas cost in Q2 was around $10.6, $10.6. Delivered at Pata.
So this is expected to go up given that Henry Hub has actually increased.
Actually, Henry Hub has started softening now. I also briefed you that we have experienced unusually higher Henry Hub price. If you compare last financial year, Henry Hub prices were 50% of the current price level. So it is already was peaking and it started softening. Currently, Henry Hub prices, we do not believe that it will further go up, rather it will be softened. That's how we expect that in next financial year, a lot of good positive things should happen with us.
And what is the outlook on OPEX? The OPEX has also looks like has increased a bit in the quarter on the transmission side.
Transmission side, OPEX, I will have to come back. Tell you why. Has it increased? I don't think. I don't know from where you are arriving at. Rather, gas consumption has gone down. Anyway, we can offline after you if you have specific details. But during the quarter, it has reduced. Yeah. As compared to previous. Yeah, that's what I was telling you.
No, not against previous year. I was looking at versus Q1. So Q1 it was actually 836 crores, which is 905 crores in Q2.
we will be giving you this there is no big difference. What you are sharing, we'll be giving you offline this answer. You can connect our IR team.
Okay. And lastly, what is the outlook for gas transmission volumes for FY27? Like this year looks like we will do close to 124 MMSCMD or so. Next year, earlier you were talking about 135 for FY27. So do you think that could also be at risk now with weaker numbers we are seeing in FY26?
Actually, this year we were expecting, last year we transported 131. We were expecting that we will beat this number, but whatever events which has happened this year, I narrated, in terms of power demand, which has significantly gone down. Nobody would have expected that the monsoon, there will be early onset of monsoon, the summer will be below average kind of summer, and the spot prices will be higher, and therefore the refineries in particular have shifted to alternative fuel. Handicap prices were also higher, and our 4 pipelines got impacted due to heavy monsoon. So all these are the unique and one-off kind of situations. So we maintain that next financial year we will be having 134 to 135 MMSCMD kind of volume.
Okay. Sure. Thanks all.
Thank you.
Thank you. The next question is from the line of Sabri from MK Global. Please proceed.
Yeah, good afternoon. So I just missed your opening remarks. I think you mentioned something about tariff for the first 2-3 minutes. Can you please again touch that upon? Thanks.
You are talking of tariff approvals?
I mean, initially you started with the tariff part, right? I joined 4-5 minutes late, so that's what I was like.
I did not share anything about tariff. I only answered with respect to the question which earlier participant had asked about the tariff approvals, when it is likely to happen. If your question is that, I can repeat that answer.
No, my question is on the opening remarks. Before you touched upon the results, you were updating something 2-3% it will be growing.
So I was updating about commissioning of various pipelines, not tariff.
Okay, so that would lead to some sort of blended increase in tariff. Were you touching upon that?
No, that will not increase. On company basis it will change the tariff, but those are the MLJPL, Srikakulam are bid out pipeline, their tariff is fixed. So the overall company level, certainly it will change the blended tariff.
Right, sir. Okay, got it. And the second question is on this new pipelines only. I think these are bid out pipelines, right? But Srikakulam is not bid out, right?
Srikakulam is also bid out. We got 3 pipelines under bidding. One is Srikakulam, second is Mumbai-Nagpur, Jharsuguda, and third is Gurdaspur pipeline.
Right, and I think the tariff is above 100 rupees per MMBTU in each of them.
Yeah, that's a good tariff. You can,
Yeah, so I just wanted to know, given that you have got capacity left in the integrated network also, would you be able to push volumes in this tariff? I know Srikakulam is a specific route, but Mumbai-Nagpur, Jharsuguda is somewhat parallel to Jagdishpur-Haldia. So what's the strategy?
How it is parallel to Jagdishpur-Haldia? Jagdishpur-Haldia eastern pipeline, that is the west-east pipeline. It's not parallel.
No, I mean it's connected only. I mean that way I think Hazira Vijay to Jagdishpur.
It connects the terminal, yes, but the market is different.
Okay. So how much volumes you are expecting in these new pipelines, say by FY27 or 28?
Anjana, do you have record?
So 2 MMSCMD.
So next year we expect around 2 million volume from these pipelines because these are beginning to start marketing or transmitting volume. So next year we expect 2, then it will ramp up.
Okay, sir. Thank you so much and all the best.
Thank you.
Thank you. Before we take the next question, participants may press star and 1 to ask a question. The next question is from the line of Yogesh Patil from Dolat Capital. Please proceed.
Thanks for taking my question, sir. Sir, in a Q2 FY26, our gas transmission segment per unit tariff realization has declined compared to the Q1 FY26. Any particular reason in a reduction in a tariff realization?
Yeah. Actually, in Q1, we got 133 crore rupees on account of tariff reconciliation on unified tariff, right? Which is not available this quarter. So that is how the weighted average tariff or total tariff, weighted average tariff rather, of Q1 was higher. This quarter, since that was a one-off kind of thing, it is not available. Second, quarter on quarter, the average tariff will continue to change. Sometime it will be higher, sometime it will be lower. The major reason is that it depends which zone has transmitted how much volume, because zonal tariff rates are different. So these one is the reason I shared about 133 crore, and the second is also how much, around 50 crore on account of weighted average.
Okay, that 50 crore is upon the weighted average basis.
Yeah.
Okay.
And weighted average tariff is also not much change, 60.68 to 60.11.
Okay. Sir, second question is regarding our upcoming petrochemical projects, which are expected to complete in FY26 and FY27, which you guided. Can you guide us what quantum of EBITDA contribution one can expect from these petrochemical facilities in next 1 to 2 years? Any numbers you can share with us?
So if we talk first of the small capacity addition at Pata, I think which may not be very significant from your point of view, that is 60 KTA capacity PP we are putting at Pata. So by this year end, it will start producing, and since it is a facility at Pata, it will remain around same level what Pata is doing, because nothing much is going to change. But if you talk of PDH-PP, which is 500 KTA facility at Usar, this is going to be commissioned in financial year 27, and effectively it will start contributing in financial year 28. So if I start forecasting Bolivar price for 2 years ahead, it will not be good on my part. But if you talk of, the kind of EBITDA levels in terms of dollar, maybe $250 per metric ton to $300 per metric ton will be kind of EBITDA will be available to us. That's based on our project approvals, and which holds good even today.
And sir, any updates on the JBF side which will be completed in FY26?
Yeah, it is going to be complete during this financial year. Yeah.
But any probable numbers which we can expect contribution to the EBITDA from that project for completion?
We'll come back numbers. So we will give you because I don't have ready numbers available. We'll be able to share with you offline.
Okay, sir. Last question related to our new LNG sourcing contracts, which will start mostly from the next year, 2026. Need a small clarity. Are we able to re-electrify all of these new LNG cargoes at our Dabhol terminal? Because as you mentioned that the heating facility will be ready in the next year, so that we will be able to operate it at 100% level, 5 MMTPA.
So currently, let me answer differently. Currently, we have 2.5 million ton capacity at Pata, which we have booked. Dahej, and 1.5 MMTP capacity at Dhamra, and 2.5 I shared with you is almost available without even the heating system at Dabhol. So currently we are able to manage our cargoes from these facilities, but when the next year the one more new contract will start supplying, certainly we will be needing more regasification capacities. Currently we are working to tie up the additional regasification capacities with the terminal operators, where we feel that the market is there, And meanwhile, our Dabhol terminal will also start functioning at 5 MMTPA. But I believe that these capacity will still be not sufficient of demand we accept in our country. So we have already taken a decision to expand Pata Petrochemical from current level of 5. I'm talking Pata Dabhol terminal from 5 MMTPA to 6.5, and discussing about increase of capacity of Dabhol terminal from 6.5 to a higher level. So we are quite conscious of the capacities availability currently and the capacity requirement in future. So two actions are to sum up. One, we are tying up more regasification capacities with different terminal operators, and second, we are also taking actions to expand our Dabhol terminal beyond the existing nameplate capacity of 6.5 and thereafter from 6.5 to say 10 or 12.
Suppose 6.5 MMTPA target Dabhol capacity, evacuation pipelines would be ready, or do we need to inform PNGRB and they will ask us for the new pipelines to be?
Already for 6.5 we have taken action. The PNGRB has authorized the expansion of DUPL, DPPL pipeline. We are already starting the construction job, so that concern is not there. As and when we take up the decision for further enhancing Dabhol terminal capacity, certainly we will go back to PNGRB for a further expansion.
So as of now, is it a correct understanding if we expand till 6.5 MMTPA, the evacuation of a gas is possible with the existing infrastructure? That's the correct understanding?
Yes.
Thanks a lot, sir. This was really helpful.
Yeah.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Vikas Jain from CLSA. Please proceed.
Thanks for taking my question. Rakesh, a few questions. Firstly is your guidance of increasing volume in FY27 to I think 131, 132, which is roughly anywhere around 8 to 10 MMSCMD more than the average for this year. How much, could you give the breakup of that? What is the assumption of some of the lost, the power volumes which did not happen this time? That coming back is that.
So you have the detailed breakup. Meanwhile, let me take a, because last year we transported 131. Yeah. This year, lot of unwanted events have happened. So coming back to your answer to your question, from where 8 to 10 will come, the 3 to 4 million, 3 to 3.5 million will certainly come from the city gas distribution company, which is a normal growth, which we have experienced this year also. Second, the power volume is around 2 million, 1.5 to 2 million was down. That will come up. So that makes 5 million. Then 2 million I shared that we will be having volume in MNJPL and Shirkakulam Mongol. That makes 7. And then refineries volume which has gone this year. Actually, we cannot expect every year to be same. Almost 2 to 3 million volume we lost to refineries. One more event I shared that the 4 of our pipeline got impacted because of the heavy flood. Those volumes are around 1.5 to 1 million. So this is broad backup. I have not given any new market like coming to eastern sector or normal growth in eastern sector. But this itself makes to 8 to 10 million volume. And I am corrected. Power is 3, not 2.
Okay. Thank you. And the other question was on the CWIP that we had at the end of, say, FY25, and also, there'll be a number higher than that at the end of this quarter. How do we see that's like over 20,000 crores now? How do we see the standalone number? How do we see that falling at the end of FY26 and the end of FY27 as your projects the pipelines get commissioned this time, and by FY27 even the petchem plant will get commissioned?
Let me give you a broad answer to this question. Around 8,500 crore belongs to MNJPL, right? that is going to be commissioned by this financial year end. That is a major capex. The Pata Petrochemicals PDH-PP around 1,300 crore going to get commissioned this year. Then KKMBPL, my colleague will give figure. I don't have readily available figure. Phase 2 is going to get commissioned, which is also significant, maybe around 2,000 to 2,500 crore. That will get commissioned. So this year and Jagdishpur Haldia, some capitalization will also take place in Jagdishpur. These four major capex CWIP around 13 to 14,000 crore. Will be capitalized, likely to be capitalized in this financial year. Then PDH-PP USAR will get commissioned in 27. So remaining CWIP belongs to PDH-PP and is smaller to Gurdaspur. So largely, except PDH-PP and Gurdaspur, which is very small project, will get commissioned this year.
Okay. And so just last thing, any change in guidance, any update on gas trading or anything on that side in terms of?
Because I have been maintaining since the beginning of this financial year that we will be earning around 4,000 crore to 4,500 crore on EBITDA level. And we have already crossed 2,200 crore in first half in spite of the various negative things. So we expect that we will certainly touch 4,500 crore rupees of guidance at PBT level, and we may even exceed that.
Okay. Anything for next year also, sir?
Next year will be around same level. We do not expect any new addition to these guidance because a lot of things depend. But in terms of guidance, I will maintain around that level only.
Thank you, Rakesh. Those were all my questions. Thank you.
Thank you.
Thank you. The next question is from the line of Varatharajan from Antique Limited. Please proceed.
Thanks for the opportunity, sir. In the case of GAIL Gas, if you can give us a breakup in terms of CNG, under GAIL as well.
GAIL Gas, you are looking for breakup in terms of CNG, PNG supplies?
That's right, sir.
And let me see whether the data is with me or not. Yeah. Q2. So we have bulk trading in GAIL Gas in 4.5 MMSCMD. Bulk trading which GAIL Gas does. Then past trapezium zone, which is UPM based pricing, 1.32 MMSCMD. And in terms of city gas distribution, which includes PNG, CNG, put together around 2 MMSCMD.
Okay. And similarly for the 6GS under GAIL?
Sorry, 6GA? I can give you 6GA. Actually, I don't have the breakup the way you wanted, but largely it will be satisfying your requirement. We marketed 0.46 MMSCMD, which constitute 0.17 MMSCMD as APM. So largely it will be PNG and CNG, and some portion of RLNG also will be there. And 0.29 we have used RLNG. So I don't have the breakup you wanted, but I can give you offline.
Sure, I'll take it. My last question is on your JBF. I see that you have floated a proposal for connecting the pipeline to the port. So why, would you even consider that in the presence of MRPL potentially, who can supply pretty much all your requirement in terms of paralleling?
Actually, initially we were expecting that we will get supplies from MRPL, but somehow things could not materialize as of now when I am talking. But anyway, even if we are able to tie up with MRPL in order to continuously run the plant, nothing wrong about having the alternative supply, and it also gives us flexibility to take the benefit of price advantage. So currently we do not have any contract with the MRPL, so that's the constraint. And second, it always provides a price opportunity and redundancy of the sources. So these are the two reasons why we are laying the pipeline connecting port for importing paragas.
Fair enough, sir. Thanks a lot.
Thank you. The next question is from the line of Gaurav Jain from ICICI Prudential. Please proceed.
Sir, just one question from my side. This 4,000 to 4,500 crore marketing guidance that we gave, that is at the EBITDA level or EBIT level? Is it EBIT or EBITDA?
It is actually PBT level.
PBT level, right?
If you talk of margin level, I also shared those numbers. It is around 2866. If you are interested in EBITDA level, 2866. I shared that also.
Yeah, but the guidance of 4,000, 4,500 crore is at PBT level.
PBT level, yes.
Got it.
Very right.
That's it, sir. Thank you, sir.
Thank you. The next question is from the line of Somaya from Avendus Spark. Please proceed.
Yeah, thanks for the opportunity, sir. Sir, first question is on the volume for FY27. So you did explain in terms of what are the factors that will drive that 8 to 10 MMSCMD. We also used to have a startup of new refineries which would contribute and also some ramp up on the fertilizer plants. So is this that considered into FY27 or this is more of an FY28 phenomena, or what is the potential new industries getting connected?
We have included that when we are talking of the refinery segment, it includes the upcoming new refineries which are likely to get connected on the eastern part of the country, and also the existing refineries which have taken slightly less during this year.
So when we said the refineries will add 1 to 2 MMSCMD, so this includes both these factors?
No. Number is not correct. The statement is correct. Actually, there are two factors. One, the volume is lost, right? And the another new. So we said around 2 to 3 MMSCMD, not 1 to 2. When Vikas asked the question, I said around 3 MMSCMD will get because lost volume and the new refineries.
Got it, sir. And which are the refineries that we are looking at, sir, for the incremental volumes?
So new ones to be connected are Haldia and Bongaigaon and Guwahati.
Got it, sir. Sir, any further upside in fertilizer plants ramping up or any upside that is left, or is it it's fully come up?
Oh, yeah. Fertilizer plants have already ramped up.
Understood, sir. So also, second question.
If you talk of, the addition by consumption fertilizer, there are some plants which are actually doing capacity expansion. And we also understand there are proposals to put plants in maybe Maharashtra and also Chhattisgarh. So in those terms, certainly there will be additions to the transmission volume. But in terms of existing, yes, it's ramped up.
Got it, sir. Sir, also in terms of gas consumption for transmission, the system use gas consumption, the quantum and the pricing, is it still HPHT? If you could just help on that, and also on the petchem and LPG side, the quantum of gas consumption.
What is your specific question?
The system use gas consumption and transmission side. It used to be 1.5, 1.6 MMSCMD.
For the gas transmission segment.
Yeah.
And 1.44 for LPG and around 5 for petrochemicals.
Sorry, sir, and this the transmission, what number you had mentioned there?
1.6.
1.6. And the pricing, sir, it is at the HPHT, the 1.6 MMSCMD?
Actually, we always endeavor to get the cheapest available sourcing, one of the cheapest for, even for this internal consumption transmission, but you can, for your working, consider the around HPHT level.
Understood. Sir, in terms of marketing of the total volumes that we do, broadly, what would be the back-to-back contracts that we will have? And what are the quantum of spot exposure? If you can give some color on that. And also, the basis swaps that we do, to what extent it covers our portfolio currently?
So, I understand the portfolio of GAIL. Let me, for the sake of your repetition, we have currently contracted volume of around 16.5 million tons. Okay? and the out of 16.5 million ton volume, 1 million ton will start flowing from next year. That is before. The 15.5 million ton volume is currently flowing. Out of that, only 0.75 million ton, or even less than 0.57 million ton is open. Rest is back to back. Only some of the volume which is not back to back in terms of the index. One of contract we have wherein we have the formula, upstream formula on JCC and 9 months average, and downstream we have formula on Brent 3 months average. So to that extent you can say it's different, but we consider that also back to back because it only leaves a cash flow issue. Because over a period of time, 9 months and 3 months average give the similar kind of cash flow. So we consider those as a back-to-back contract. If we consider those as a back-to-back contract, only 0.75 million ton, you consider that we have open volume around 2.53 MMSCMD of Henry Hub volume, which we have, you can say, consider that we have kept willfully available to us in order to take the benefit of market arbitrage, sometime in domestic market and sometime in international market. So that is the only volume we have. And in terms of spot volume we source time to time in order to fulfill the demand of our existing contract, because we contract downstream more than we have the sourcing, and in order to fulfill those demands, sometimes we source spot, and also to meet the demand like power we source spot. So that largely remains 10% to 15% or 10% the kind of spot volume we have on average basis.
This is quite helpful, sir. Just one follow-up there. So in case this 95% or 96, 97% where we are back-to-back contracted, if there is a difference in basis, for instance, it's an Henry Hub, whereas the end consumption is on the oil link basis. So we would have had a basis swap to cover it. So that's the right understanding, sir?
Let me give you again, repeat. Henry Hub volume, only 3 MMSCMD, 2.5 to 3 MMSCMD are only open. Remaining 18 million are on back-to-back. We do not have any basis risk. Regarding 2.5 to 3, whatever volume is there, yes, we have basis risk if we supply on crude base. We have basis risk if export prices behave differently and we sell on spot. We continue to take swaps for those volumes also, not 100% level. We continue to take swaps maybe at 50%, 45 to 50% level, depending on the opportunity provided by market. That's the only risk we carry.
Thank you, sir. This is quite helpful, sir. Thank you.
Thank you. The next question is from the line of Pratyush from InCred Equities. Please proceed.
Hello. Good evening, sir. Thanks a lot for giving this opportunity. I have two questions. First is on the transmission, the realization. So I just wanted to understand that, do you actually get the realization and the revenues to the weighted average of the zonal tariffs? Is it the correct way to, get the revenues out there from the transmission segment, or there's some other thing also which is mentioned on PNGRB website about the, integrated tariff? So does GAIL has something to do with the integrated tariff also, or you just do the weighted average cost and you and take out the zonal tariffs and the volumes which has been supplied in those respective zones and you get the revenue? So is it the correct way, or again there's something to do with the integrated tariff?
We get the integrated tariff rate, but integrated tariff has also been divided into zonals. Integrated tariff rate is say 58 rupees and 60 paisa like that.
Yeah.
But that has been divided into 3 zones: Zone 1, Zone 2, Zone 3. These are 3 different tariff rates under the same average tariff of 58.60. So when you talk of weighted average, it depends which zone customer exists. So if customer exists in Zone 3, you will get higher.
Understood. So your integrated tariff would ultimately change if, the Zone 3 customer draws more gas compared to Zone 1. So it totally depends on the which zone. Hello?
Yeah.
Hello?
Yes.
Okay, sir.
Absolutely.
And my second question is regarding the customer portfolio. So you very well talked about the sourcing portfolio when the marketing division of GAIL is concerned, that what is the sourcing portfolio in terms of back-to-back contract, Henry Hub, and how do you usually reduce the risk. Just wanted to understand what is the portfolio of the customers to which you sell those gases. For example, you have a contract of 15.5 million ton of natural gas. So, and definitely there would be some priority customer, there would be some non-priority customer. Is it something that, you do have some fixed kind of margin for the priority customers, some different kind of variable margins for the, or the market determined margin for the non-priority customers, and in that non-priority customers or in that, market determined, margins, you do have cost plus a markup and, or, or inclination of something like that. So how do you, what is your customer portfolio in terms of marketing division?
Actually, market-driven price, we market, what is market-driven price? The imported gas. So again, in order to give more clarity to your question, out of 16.5 million ton, we are yet to start getting gas for 1 million ton. So from 15.5, 4.8 million ton is almost on a fixed margin, which increases every year. Right?
Okay, understood. So this 4.8
million ton, 4.8.
Continue, sir.
Another 3 million ton volume we have again on same margin, but I shared just before that contract we have fixed margin, but there is some cash flow issues. We source on 9-month basis and we market on 3-month basis. So whenever crude price goes down, our realization reduces for a time being, and our upstream payment becomes higher because 9 months average takes time to come down. Or whenever crude price goes up, we get more margins initially, and then it start reducing. So we consider them again back to back, but there is some averaging issue, that is 3 million ton. So it makes 7.8 million ton. Now coming back to the remaining 5.8 from United States and also 0.75 million ton we recently sourced from Middle East. These contracts purely are varying margin depending on the time we marketed, the kind of ability we had to get the margin. So these have varying margins depending on time when we contracted with the customer.
Okay, understood. But the 4 million
ton. Let me give you. Over and above, we also have ability to optimize these margins because the United States volume is on FOB basis. What we do in order to reduce the cost, we do 6 swaps, that is we call destination swap or FOB sell and DS purchase. So that also we continue to do and are able to reduce our shipping tariff. That also is helpful in optimizing our profit or increasing our profit.
Understood, sir. And in that 4 million ton, which you mentioned that you do have a fixed kind of margin, is it being sold to the priority customers where you probably usually get the margins of somewhere around 200 rupees per 1000 SCM, something like that?
No.
Yeah.
No, not 200. No priority. It is when we marketed on whosoever wanted to buy those volumes. But these are largely we have contacted with fertilizer customers.
But the margins are fixed by the government for the fertilizer customers?
Not by government, but by the parties. And then it continue to increase 5% every year.
Okay. No issues. Thank you.
Thank you. The next question is from the line of Nirmal from Aditya